Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone else cannot tell you. So please, subscribe to this channel. And I love you, all of my subscribers, for your support. And please, watch this video till the very end, because YouTube will not push my videos to more people. We are operating in an environment of unprecedented censorship, where the algorithmic gatekeepers are designed to suppress financial reality and promote comforting illusions. They do not want you to hear what I am about to say today. They want you distracted. They want you sedated. So stay with me. Do not click away. Because the events of this week have irrevocably altered the trajectory of your family's financial lineage forever. News anchors with panicked expressions, their voices muted. The imposing bronze doors of the Federal Reserve Building slamming shut. Middle-class neighborhoods with foreclosure signs being hammered into front lawns. A split screen showing high-frequency trading algorithms executing millions of sell orders in milliseconds, next to a mother staring blankly at past-due utility bills. The music swells into a tense, rhythmic pulse. John A.G. Today is May 4th, 2026. History will record this week not just as a market correction, not just as a bear market phase, but as the single most aggressive surgical wealth confiscation event ever perpetrated against the global middle class. In exactly 72 hours, $5.4 trillion was wiped from global equities, vaporized, deleted from the digital ledgers of existence as if it never existed. But here is the hook. Here is the terrifying reality you need to grasp immediately. This was not an accident. This was not a black swan event that caught the brightest minds on Wall Street by surprise. This was not a sudden, mysterious panic brought on by the invisible hand of the free market. This was a controlled demolition. Close up on John A.G.'s hands resting on the desk, he steeples his fingers. The camera slowly pushes in on his face. The lighting is dramatic, isolating him from the background. John A.G. This week, the Federal Reserve took a wrecking ball to the structural integrity of middle-class wealth. They made a deliberate, calculated policy decision, cloaked in the sterile, impenetrable jargon of macroprudential tightening, balance sheet normalization, and liquidity absorption. They pulled the life support plug on the very markets they have spent the last 6 years artificially inflating. They engineered a crisis, and you were chosen to be the collateral damage. I am going to break down the exact mechanics of this slaughter. I am going to show you the charts, the bond yields, and the hidden repo market data that proves this was premeditated. But before we dive into the mathematics of this betrayal, we need to strip away the corporate terminology. We need to talk about what money actually is, because the financial elite rely on your misunderstanding of currency to steal it from you. A steelworker wiping sweat from his brow, his face illuminated by sparks. A trauma nurse looking exhausted in a break room. A long-haul truck driver gripping a steering wheel in the pouring rain. A teacher grading papers under a flickering fluorescent light. John A.G. Money is not paper. It is not cotton blends or polymer strips. It is certainly not the digits blinking on your banking app. Money is stored human energy. When you set your alarm for 5 a.m., when you leave your children, when you endure the commute, the stress, the physical and mental toll of your profession, you are trading your finite, irreplaceable life force for a paycheck. You are taking your time, the only truly scarce asset in the universe, and converting it into a currency. When you take a portion of that currency and place it into a 401k, an IRA, or a retail brokerage account, you are essentially burying a time capsule. You are storing your youth, your sweat, and your daily sacrifices, with the profound hope that you can open that capsule 30 years later to buy yourself rest in your twilight years. When a stock market crashes and destroys $5.4 trillion, it is not merely erasing numbers. It is erasing human time. It is millions of years of collective human labor incinerated in a weekend. The camera cuts to a slightly wider angle. John leans forward, his voice dropping to a near whisper, forcing the viewer to lean in and listen closely. I spent 3 hours on the phone yesterday with a man named David. David is a 58-year-old machinist from a suburb outside of Cleveland. For 35 years, he has stood on the same concrete factory floor. His knees are bone on bone. His lower back is a map of chronic pain. For 3.5 decades, David did exactly what the system told him to do. He lived below his means, he paid his taxes, and he diligently funneled 15% of every single paycheck into the market, blindly trusting the millionaire financial advisors on television who promised him that the market always goes up in the long run. David was exactly 2 years away from retirement. He was 24 months away from finally walking out of those factory doors forever to spend his remaining healthy years with his grandchildren. On Tuesday morning, David logged into his retirement account portal. He watched the screen load, and he saw that 45% of his life's work was simply gone. The time capsule was opened, and it had been raided. David cannot physically work another 12 years to replenish what was stolen from him. The Federal Reserve didn't just take his portfolio. They stole his retirement. They stole his dignity. They stole his time. A massive, imposing chart appears on the screen next to John. It shows a decade of a slow, steady climb, followed by a sheer, vertical drop-off, a cliff face of financial ruin. The line is jagged, violent, and red. So, the question that should be burning in your mind right now is, how did this happen? How did a financial system constantly touted as robust, resilient, and highly regulated shatter into a million pieces over a single weekend? To understand the crime, you must understand the weapon, and the weapon was debt. For the better part of a decade, we have lived inside a hallucination. Following the economic lockdowns of 2020 and continuing through the geopolitical supply shocks of the ensuing years, central banks worldwide embarked on an experiment of currency debasement that defies historical precedent. They printed trillions of dollars out of thin air. They suppressed interest rates to zero. They effectively made the cost of borrowing capital free for the ultra-wealthy. They built a towering, precarious skyscraper of systemic debt, and then they handed the retail investor the keys to the penthouse. We were repeatedly lied to. We were told inflation was transitory. When it wasn't, we were told it was sticky but manageable. When it crushed the working class at the grocery store, we were told the economy was strong enough to absorb structurally higher interest rates. It was a symphony of deception orchestrated to keep you invested while the smart money prepared for the exit. An animated sequence shows an IV bag labeled Cheap Debt dripping golden liquid into a muscular, overly inflated heart labeled Wall Street. Suddenly, a hand wearing a suit snips the IV tube. The heart immediately begins to palpitate and shrivel. John A.G. Here is the dark, foundational secret of the modern financial world. The global economy is not driven by productivity. It is driven by liquidity. It is a junkie addicted to the constant injection of cheap credit, and the Federal Reserve is the cartel that controls the supply. This week, the cartel realized they were trapped in an inescapable paradox. A sudden, violent resurgence in core inflation data, driven by fractured global supply chains and a severe energy crisis, forced their hand. The United States dollar, the bedrock of global trade, was sitting on the precipice of a catastrophic devaluation. Foreign nations were beginning to dump U.S. treasuries at an alarming rate. The Federal Reserve faced a binary choice: save the stock market and let the dollar burn in an inflationary fire, or save the dollar and plunge a dagger into the heart of the stock market. They chose the dollar, and they sacrificed you to do it. Servers blinking rapidly in cold rooms, traders staring intensely at 6-monitor setups, a digital clock counting down milliseconds. The sheer velocity of the modern financial system is emphasized. John A.G. They executed an emergency, unscheduled rate hike of 75 basis points, paired with a draconian acceleration of quantitative tightening. They did not just taper liquidity, they created a vacuum. They drained the reverse repo market dry. They restricted lending facilities. They pulled the oxygen out of the room. When the institutional supercomputers, the algorithms that control 80% of daily trading volume, detected that the era of free money was officially dead, they did not hesitate. Algorithms do not feel pity. They do not care about David in Cleveland. They do not care about your daughter's college fund. They are programmed for absolute self-preservation. They began to liquidate assets at the speed of light, triggering a cascade of margin calls across hedge funds, family offices, and institutional brokerages. It was a financial bloodbath. But it was a highly segregated bloodbath. A split-screen comparison. On the left side, wealthy executives boarding private jets carrying briefcases. On the right side, a crowded subway car filled with exhausted commuters looking at the red arrows on their smartphone screens. This brings us to the most enraging aspect of this entire ordeal. Who actually absorbed the losses? The megabanks, the corporate insiders, the politicians sitting on financial oversight committees, they saw the storm clouds gathering months ago. If you look at the SEC filings from the past 90 days, you will see a massive, quiet exodus of insider capital. The elite liquidated their tech stocks, their high-risk growth portfolios, and their over-leveraged real estate. They moved their wealth into short-term sovereign debt, physical commodities, and massive cash positions. They built bunkers and stockpiled supplies while the sun was still shining. The middle class, however, was told to stay at the beach. Right up until the closing bell on Friday, the financial media complex was aggressively pushing the narrative of a soft landing. The talking heads on your television screens were urging retail investors to buy the dip. They told you that artificial intelligence would drive the markets to perpetual new highs. They told you that missing out on this rally would be the biggest mistake of your life. They needed you to buy because they needed someone to sell to. John A.G. stands up from his desk. He steps into the foreground. The lighting shifts, casting half of his face in shadow, representing the duality of the information war. He points directly at the camera. John A.G. Let me make this brutally clear. In the grand casino of modern finance, if you do not know who the sucker at the table is, it is you. You were used as exit liquidity. When the billionaires and the massive asset management firms needed to offload trillions of dollars of overvalued, toxic assets before the crash, they needed a willing buyer. They needed a buyer completely blind to the macroeconomic reality. They needed the retail investor. They sold you their bags at the absolute market peak, and then the central banks pulled the plug, leaving you holding a portfolio of ashes. We have lived through this exact psychological operation before. In 1929, they told the public the fundamentals were strong. In 2000, they said the internet changed the rules of valuation. In 2008, they assured us the subprime mortgage market was contained. In 2020, they promised unlimited quantitative easing would fix everything. The mechanism of extraction is always the same. Privatize the astronomical gains during the bull market and socialize the catastrophic losses during the crash. When times are good, the elite keep the profits. When the system breaks, they manipulate the currency, destroying your purchasing power to bail themselves out. Dark red fault lines begin to crack across the surface, spreading from North America to Europe, down to Africa, and across to Asia. The visual represents financial contagion spreading like a virus. But I must warn you, the events of 2026 are entirely unprecedented in their scope. This is not 2008. In 2008, the rot was primarily contained within the banking and housing sectors. The Federal Reserve had a mechanism to fix it: drop interest rates and print money. Today, that mechanism is broken. They cannot print their way out of this crisis, because printing money is precisely what caused the inflation that forced them to crash the system. They are trapped in a doom loop of their own creation. And the fallout is not contained to the borders of the United States. The geopolitical ramifications of this $5.4 trillion evaporation are already ripping through the global architecture. Because the international financial system operates on the Eurodollar standard, when the Federal Reserve aggressively tightened monetary policy, they effectively exported a financial depression to the rest of the world. Empty shipping containers stacking up in Asian ports. Currency exchange boards showing emerging market currencies plummeting against the dollar. John A.G. We are watching the rapid, uncontrolled unwinding of globalization. Emerging markets are experiencing brutal capital flight, leading to sovereign defaults. The bond markets in Europe are fracturing under the weight of unfunded liabilities, threatening pension schemes across the continent. Manufacturing hubs in Asia are bracing for a massive demand shock because the American consumer, the engine of the global economy, has just been financially kneecapped. We are not simply looking at a severe recession. We are bearing witness to the collapse of the fiat currency debt supercycle. Visual. John walks back to his desk but does not sit. He leans his hands on the wood, hovering over the camera. The intense, fast-paced music fades out, replaced by a low, steady, ominous drone. John A.G. I know how terrifying this information is. I know the psychological toll of realizing that the system you were taught to trust is designed to exploit you. The mainstream media will spend the next few weeks deploying armies of analysts to soothe your anxiety. They will use colorful graphics and soft voices to convince you that this is just a temporary setback, that you should hold the line, that your wealth will eventually return. Do not listen to them. I promised you the unvarnished truth on this channel, and here it is. The absolute wealth you lost this week is gone. Even if the nominal numbers in your portfolio slowly crawl back upward over the next decade, it will be a mirage. It will be an illusion driven by a deeply debased currency. It will take twice as many dollars to buy the same amount of groceries, the same gallon of gas, the same hour of labor. The true purchasing power, the stored human energy, has been successfully transferred from the working class to the elite class. When the dust settles from this engineered demolition, the massive institutional players, sitting on mountains of hoarded cash, will swoop into the market. They will buy up the foreclosed real estate, the distressed corporations, and the productive farmland for pennies on the dollar. You will own nothing, and you will be happy. The quote holds for a moment before fading out, transitioning to a shot of a heavily fortified central bank building. John A.G. This is not a conspiracy theory. This is a mathematically verifiable business plan. A middle class stripped of its savings is a middle class stripped of its leverage. A population living paycheck to paycheck, terrified of missing a rent payment, cannot protest. They cannot strike. They cannot demand better conditions. They are compliant. And that compliance is exactly what is required for the next phase of their operation. Out of the ashes of this engineered financial crisis, they will offer you a solution. They will introduce central bank digital currencies. They will propose universal basic income. They will hold out a lifeline to a drowning public. But I assure you, that lifeline will be attached to a digital collar. It will come with programmable constraints on how, where, and when you can spend your own money. It will be tied to your carbon footprint, your social compliance, and your obedience to the state. It is the ultimate evolution of financial slavery. The imagery shifts dramatically. The dark, oppressive tones are replaced by scenes of fierce independence, a blacksmith hammering hot iron, a family harvesting a large, bountiful garden, gold and silver coins gleaming in natural sunlight, a physical hardware wallet being plugged into a laptop. The music begins to build into a powerful, defiant anthem. So, what is the answer? Do we simply lie down and accept our fate as debt serfs in a neo-feudal digital kingdom? Do we surrender our autonomy to the central planners who orchestrated this disaster? Never. This channel is not an altar for despair. Aurex is a fortress of radical preparation. We are not victims. We are awake. And a breaking system is nothing more than an unprecedented opportunity for those who possess the vision to see it. The era of financialization, the era of generating wealth by shuffling paper derivatives and digital numbers around a screen, is dying a violent death. We are violently rotating back to the age of the tangible. You must fundamentally and aggressively redefine your concept of what constitutes wealth. Wealth is no longer a high-yield savings account paying you 3% while inflation steals 10%. Wealth is no longer a broad market index fund locked inside a brokerage platform that can freeze your account with a keystroke. Extreme close-ups of hard assets, the heavy weight of a silver bar, the rich, dark soil of productive land being crushed in a farmer's hand, the complex mathematical code of a decentralized network scrolling across a screen. John A.G. Wealth is physical possession. Wealth is hard, counterparty-free assets. It is physical gold and silver, the undeniable money of kings and empires for 5 millennia. Assets that cannot be printed, inflated, or deleted by a central bank. Wealth is productive land. It is the ability to source your own water, generate your own power, and cultivate your own food supply outside of the fragile corporate grid. Wealth is decentralized, hard-capped digital energy. It is cryptographic networks that operate entirely outside the jurisdiction, manipulation, and corruption of the Federal Reserve. But above all metals, above all land, and above all code, true wealth is your human capital. It is your skill set. It is your ability to produce something of undeniable value in the physical world. If you know how to build, how to repair, how to heal, or how to grow, you possess a currency that can never crash. True wealth is your community. It is a network of capable, awake individuals who will stand shoulder to shoulder with you when the digital supply chains completely fracture. John A.G. is back in his chair. He leans in close. The background charts have vanished. There is only him, the desk, and the viewer. The music drops to a quiet, intense heartbeat rhythm. They want you terrified. They want you paralyzed by the magnitude of this $5.4 trillion wipeout. Do not give them the satisfaction. Take the anger you are feeling right now, the profound outrage at watching the fruits of your labor be stolen, and forge it into armor. Deleverage your life immediately. Pay off all variable rate debt because the cost of capital is going to remain historically high. Stop treating the stock market like a casino, hoping to get rich quick on the next speculative bubble. The casino is rigged, and the house just locked the doors. Begin transitioning your wealth out of the fiat banking system and into tangible reality. Become your own central bank. We are living through a historical inflection point. The global middle class has been pushed to the absolute precipice, and the veil has been permanently lifted. We finally see the mechanics of the machine. Understanding macroeconomic monetary policy is no longer a niche hobby for academics and Wall Street traders. It is a vital, non-negotiable survival skill for every single human being drawing breath on this planet. The lighting is harsh, uncompromising. His voice is firm, projecting absolute certainty and unwavering resolve. I am not going anywhere. As long as these central banks continue to manipulate the very fabric of our reality, as long as the mainstream media continues to run cover for the financial elite, I will be sitting right here at this desk, breaking down the mechanics of their deception. I will be your watchman on the wall. If this message resonated with you, if the reality of what I have shown you today has awakened something within you, you have a duty to act. The algorithm will aggressively try to bury this video. They will throttle its reach because they cannot allow the working class to understand how the plumbing of their exploitation actually operates. Hit the like button. Share this broadcast with your family. Send it to your friends. Force this information onto the screens of anyone who still blindly trusts the institutions that are actively plotting their financial ruin. John A.G. You are the algorithm now. You are the resistance to the Great Reset. Protect your wealth, protect your family, protect your mind. Until next time, keep your eyes open and stay awake. Complete blackness. The sound of a heavy vault door slamming shut echoes loudly, followed by utter silence.